Alright, welcome back everyone. So we've done a lot so far. We have built the moving average convergence divergence, the relative strength index, Bollinger Bands, and the money flow index. So that's 4. Today, we're going to start combining others with our relative strength index. So relative strength index, we've already done with the MACD. So we're going to go straight to relative strength index, money flow index. So let's combine those two indicators together to see if we can get any confluential signals from those two. And you guys see the pattern. We're going to combine everything with everything before moving on to more elaborate tests. First, I just want to get us to do every single pair. So that's going to be a lot of episodes, but we're going to do it. So RSI, MFI, because you've already done RSI MACD, dots IPYNB, and then we're going to paste in our code from previous projects. So let's look at the MACD MFI. Start with getting our data and import the same packages. Run everything to initialize my kernel. I'm going to add the MACD and the... No, I'm not. I don't want the MACD. We're doing the relative strength index and the money flow index. So we're going to go to our RSI code. Add RSI. Make a global variable for the RSI length, and that is 14 by default. And we're going to have an overbought and oversold threshold for both the MFI and the RSI. So MFI overbought 70, MFI oversold equals 30. We need to do that for MFI, for RSI as well. RSI and RSI. 70-30, and then this is also going to be 70-30. Those are the default overbought and oversold thresholds for both of those indexes. Now, we're going to do 1,000 days of look back. We're going to do length is the RSI length. And for this, RSI overbought and oversold. RSI oversold. Great. And then this is just going to be overbought. And this is going to be oversold. Perfect. And same thing here. RSI overbought, oversold is RSI oversold. And we learned from our other videos that this is best to be renamed. So add the RSI strategy here. And then instead, so let's look at this for an example. Yeah. So we need to name this after the indicator we're using. So you can see in the MACD strategy, we named the columns MACD strategy. So we're going to name it RSI strategy, and RSI strategy. Great. So that's everything we need for the relative strength index. Now, let me make a main function. Get data frame equals add RSI to the data frame, and then data frame equals add RSI strategy to the data frame, and then return the data frame. Data frame equals main, and then print the data frame. something is wrong. No price data found for ODD. Maybe there's no 5-minute price data for ODD, so I'm going to do SPY and then 1 day, just because that's safe. And we can get rid of this. Perfect. So now we have the relative strength index of the S&P 500 over the last 1,000 days. And our strategy is only -1 when this value is greater than 70, and it's only 0, like you can see it's 0 now that it's back below 70. So when it's above 70, we're going short. When it is below 30, we're going long. Long position here, short position here. Now we're going to do the same thing for the money flow index and add that to our main function so we can test them in harmony with one another. So let's go relative strength index. Let's get to our money flow indicator code. Add money flow index strategy. Control C. And just paste that in. And I want to do the same thing as we did earlier. So overbought and oversold are now going to be the MFI overbought and oversold values. MFI overbought and MFI oversold. And then here we're just going to do overbought, oversold. Perfect. Then MFI overbought, MFI oversold. Awesome. So we have global variables for each of our indicators and strategies that match them. We're going to run this main function now with data frame equals add MFI to the data frame, and data frame is going to be add MFI strategy to the data frame as well. Turn the data frame and everything should be good because we have plot figure all sorted out here. Let's do it. Great. So here's the relative strength index, the money flow index, and what we want to do is create strategies where when these overlap, if there's two that are happening at the same time, then we'll take a short position. When there's two that are in the oversold territory at the same time, we'll take a long position. And maybe these two indicators working in harmony will give some confluence and provide some sort of investing edge. Remember, money flow index accounts for volume weighted average price. It is taking a 14-day moving average of the average price weighted by volume. So this is accounting for volume, and the relative strength index is accounting for momentum. Those are, in my opinion, severe oversimplifications of what these are. Maybe not oversimplifications, just overextensions of what these are doing. You can use terms like momentum, volume weighted, like you can use terms like momentum, liquidity, strength, whatever you want. But they're just words we assign to the stock market that don't actually mean anything when we put it to the test. And that's the purpose of this whole series. There's not really a narrative you can tie to how share prices move if testing it like this yields terrible results. You shouldn't call it momentum if it's completely capable of just changing directions the following day. It's just, that's a physics term that people like to extend to the stock market, but it's a different space. That's all it is. Now, what we want to do is take long positions when the sum of the money flow strategy and the relative strength index strategy are 2. And we want to take short positions when their sum is a -2. And we have a function that does this from our MACD combination strategies. So adding the full strategy is just adding the columns of our two previously defined strategies. So we now have data frame MFI strategy. But we defined RSI first, so that's going to make me happier to do this. And we have the money flow index strategy as well. So we have full strategy is that, and then this, just the strategy column is going to be where the full strategy equals 2, give it a 1, where the full strategy is -2, give it a -1, and then we're going to multiply the assets' cumulative returns by what we define our full strategy column to be. It might sound a little complicated if you are coming here for the first time, but if you've been watching the process of making these functions, this is actually, in my opinion, an extremely simple, and I'm very proud of saying understandable system that we've come up with. So no worries if this is your first time watching. I do recommend you check out how we built all these other functions so you get a better understanding of what my goal is when we combine them. Now, after we've added the full strategy, let's just add it to the main function now. So data frame equals add full strategy to the data frame. And I'll show you what the data frame looks like. Just so we can take a look. RSI strategy is not defined. Yes, it is. Did I mistype it? Yes, I did. Excellent. So the full strategy is usually 0, but you can see that when the MFI is -1, the RSI is -1, that means our strategy is going to be -1 because the sum of them is -2. So we're taking short positions, for example, here. Or, sorry, we're taking short positions here, where they're both at the overbought threshold. Perfect. Now, from there, we want to test what that strategy looks like. And again, we've set this up, so all we need to do is paste in some of our previous functions. And we are multiplying the asset returns by the strategy column. And our strategy columns are defined as the sum of our previous two strategies. Really elegant, in my opinion, but I'm saying that because I made the code. So you can agree with me or disagree with me. I think it's awesome. Test strategy of the data frame, and that is going to show us a plot of our cumulative returns being short when these signals agree with each other and long when they don't. And long when they agree with them in the other direction. Now, this is a super cool plot to explain our line of work. I didn't know this was what it's going to be, but this is actually super informative. Take a look at this 100-day period. This is 1,000 days of tests. This is about a 100, maybe 200-day period right here. And that is just winning. That is an awesome period to be using this strategy. You know, the S&P is going straight down. Well, you're just more or less going straight up with only, it looks like 1 or 2 small failures. Now, if you were to backtest in this period, you would think you've done it. You have found a strategy that works. Look at this. And it took you probably, a week to get all of this information. I'm super excited to have found this strategy. But now that we're just able to put in the number 1,000, run the code, and then test the strategy like this, it's much more obvious how difficult it is to create a strategy from these technical indicators. We can also modify whether we want to be long or short when it's overbought or oversold. We can just flip those on their tails, but I imagine that would not give very many signals. We can do anything we want. What if instead of 70-30, we made it way easier to get confluence by dropping one of them down to 60-40? Let's drop the volume weighted momentum indicator, the money flow index, down to 60-40 to see if holding a position longer gives us better results. And the results are slightly better. This might just be because we are, like, look at this. That's a long day of winning or being flat, but eventually the compounding effects of the S&P 500 just destroy you. So it becomes more obvious when we move it up to 10,000 days. Let's run this one more time and I'll show you. I'm imagining this is going to be relatively flat. Yeah, it's pretty flat. And we can test these trades in a different way. Instead of taking cumulative returns, we can just take their average wins, average losses per trade every time we're long or short. But the truth is, if a trading strategy that you have on any particular asset with, we're taking thousands of trades throughout this amount of time, only yields you these returns, you're just better off buying and holding. If these indicators are designed to give you an indication of when to buy and when to sell, and yet using them, even in confluence with one another, yields these results, it looks to me like they might not be the most helpful tool for making that happen, or suggesting that characteristic. Let us take a look at different tickers, different time frames. Let's do Tesla on the 1 hourly chart for as many hours as they have. Just straight down. Let's move this back to 70-30 just to keep it clean and defaulty. And we can I'll do one more. Duolingo is my favorite ticker from this quarter, which you guys can see for free. And you're not competing. Of course you're not competing because this was rated strong, and my strong stocks always do super well. We bought this like around here this quarter, which is just such an awesome purchase. In my opinion, Duolingo's up about 70% since we bought it. So awesome. Thank you guys for sticking around. We now have yet another confluential strategy that doesn't quite work, probably because we're taking really simple approaches to them. And there might be a combination or modification of this code that I have not tested yet that you guys can find on your own. And I've posted this code for free. You can paste it into your terminal and run it how you like. Mix it with your strategies. Build something more extravagant, more elaborate. And that's what we're going to be doing together slowly. But if you have a good idea of what you want to do yourself, explore this. It's completely up to you. So congratulations on combining the money flow index and the relative strength index together to see how they work or don't really work in harmony. I will see you in the next episode where we're combining the relative strength index with Bollinger Bands. Until next time, stay sharp.